everyone. Welcome to the Stock Market Morning Prep video for Tuesday, June the 3rd. Markets were mixed yesterday. Very, very quiet, actually, to say the least. Dow Jones up 26, NASDAQ down 5, S&P up $1, and the Russell literally flat on the day. No movement at all. We did have some comical events from the economic data that came out yesterday morning around 10 o'clock. The ISM manufacturing number came out less than expected. Markets sold off around 10 o'clock. And sure enough, the government came out and changed the numbers. Oh, we made a mistake. And they did it twice in a day. So that's pretty much, I should say, very, very comical, to say the least. And the markets rallied back up again and literally traded flat for most of the day, a slight push into the close. But nonetheless, guys, very, very quiet on no volume at all. This is now 9 days straight up, and a little bit of movement here and there. But to say the least, we've been pretty much holding this trend line going higher. So something's got to give here. There's absolutely no volatility. The summer hasn't even really started other than a few days ago, and it seems like we're at the middle of August already. So something will give here. We have ECB coming out with some numbers coming out on Thursday, and they're also speaking as well. And then you have non-farm payroll numbers. So those two are going to shake up the markets, to say the least. The forex markets are saying totally a different picture than what equities are saying. So it's just really interesting to see how this outcome is going to end up. And to me, it looks like, I still think, it's to the downside, and rightfully so. I would love to see a move lower. And again, not talking about any type of crash at all, but these markets need to move lower at least a little bit, so we can realign itself, readjust itself, and unwind some of this overbought reading. A lot of stocks still are not moving. There's a handful of stocks that are moving, but yet you have bonds still well bid up, even though we had movement in bonds a little bit lower the last couple of days. And then you had, on top of that, we have money flowing, continually flowing into healthcare, utilities, and consumer staples. Not good. Right? We have rotation of money going into these safe haven sectors. So I don't know what's going to happen, but I'll tell you, from what I see, I do think that we do see lower prices, at least in the short term, and I mean at least a small little correction, which is so needed. To be up at these levels in 1924, you need new money coming in, and without new money pushing markets higher, I mean, pretty much markets ran the stops from 1900 all the way to 1924. So to me, I think the markets are in dire straits of some sort of a pullback, and that would be so healthy for the markets and trading in itself. All right, so what I did is I went into a different charting service just to kind of get a different perspective, a different view, but it's pretty much the same. We do have the VIX down here below at the lows. Again, extreme complacency, not good if you're a contrarian, right? Markets here now, I want to see this VIX start to break back up here. If we do break up, we'll get one big push lower, which I think would be ideal, and then markets start to, the VIX in itself would move higher, and then that would put pressure on equities. But again, guys, it's all a wait and see game here. It really is, and it's boring, quite boring, for to say the least. But at least something. We get some movement here. We can literally get back into some decent trading. Okay, most of the indices put in a hangman, which is again indecision. Like we did, like this little candle here and this candle here. We're up now about 9 days in a row. As you can see, all of the indicators are overbought. Not as much as diamonds as the other indices are, but again, 9 days straight up without a pullback, way away from the 8, the 20, and the 50. So again, looking for a pullback at least to the 20-day moving average if we do get some sort of a sell-off here. All right, so let's take a look at the spiders. Again, spiders, similar chart. As you can see, really no movement at all yesterday. We had spiders putting a hangman itself. And again, you can see the overbought reading in RSI, MACD, and stochastics. So again, guys, I would not be chasing price back at these levels here. Let the market pull down a little bit, at least to the 8. I mean, this is a while I've seen this happen before. As you can see, we don't get too far away from the 8 before we pull back in again. As you can see here, we pull back in again and then back again. But you can see usually the 8 kind of hovers the price action, and this is now way extended here. Again, and remember, the most important factor, this market has been up on absolutely zero volume, zero. So that to me is a concern. Qs, same thing with the Qs, as you can see here. Challenging the highs, actually really took it out above the highs, but you can see RSI, MACD, Stochastic still way above grossly overbought levels. Again, a nice correction back to the 20-day would be ideal, but we'll see. Again, let's not go out and just short the market. Let's let the market tell us what to do. In the meantime, buy stocks that have created bases, that have already made its move lower and now realigning itself. That's the best situation to stay long, unless you want a short relative weakness. But even being short relative weakness, that stocks, they still tend to be bid up a little bit. All right, IWM, the weakest link here. You could even see some sort of a head and shoulders forming, that right shoulder, head, left shoulder, right shoulder here. So it does look like it's forming some sort of a right shoulder, but you can see IWM definitely the weakest link here. Can the IWMs pull the markets lower? I don't suspect one indice will move the market slow. If anything, IWM should move higher if the other indices continue to move higher. And that's also a play as well. I mean, if you're looking for something to buy that's not so overbought, the IWM would be one of the cases. And it looks like to me, it's just looked like it's flagging here. Fill the gap area. So to me, this would be a go-to index for a long play if you are looking for that. But again, it's still counter trend because it's still making lower lows, lower highs. Although it did break that bearish symmetry, but for a trade, I would suspect that would be a decent trade to the long side. And lastly is the transports. As you can see here, totally out of control. We did have one spike up here for capitulation, another spike up, but other than that, we have dismal volume on this whole move up, guys. Okay, and obviously RSI is overly extended. You can see that in that green. You can see MACD and Stochastics here pointing extremely overboard. So this is definitely due for some sort of a pullback or a correction. Once we get a lower close on a closing basis, I'm going to be looking to short the the transportation sector, or one of the components in that IYT, which would be Union Pacific, UNP, FedEx, or UPS. Those are the three biggest, heavily weighted in the IYT. So those are the ones I'll be looking at. And again, price is going to need to close below, and we're going to have to start making lower lows, lower highs. That cannot happen for another week. Who knows? But in the meantime, be on your toes here, guys. We do have extreme complacency, no volume, no movement at all in the markets, other than the indices moving up higher and notching higher and making new highs every day. So to me, that's a big warning sign, especially when you have numbers that are coming out worse than expected, and all of a sudden the Federal Reserve says, "Oh, wait a second, wait, no, we made a mistake. We made a mistake." How does that happen? Anyway, that's was really comical yesterday. So be on your toes, guys. This week is going to be a pretty decent week. I don't suspect much movement today or even tomorrow, but again, be cautious in going into Thursday and Friday with the ECB and, of course, non-farm payroll numbers that come out on Friday, because that is going to be a market mover, to say the least. Whether it be up and or down, it will be a market mover. So if you are long heavily, tighten your stops, buy protection, or lighten the book up a little bit going into Thursday, okay? Have a great day, everybody. We'll speak to you tomorrow. Take care.